I'm Matt Bouchard with REIT.com here in San Francisco for REIT World 2013. Today I'm joined by Jim Sullivan, the Managing Director of REIT Research with Green Street Advisors. Jim, thanks so much for taking some time.
Thanks for having me.
Now, Green Street often comments on the public market, private market arbitrage that REITs can take advantage of. What is that and why is it so important?
Well, Matt, public REITs sit right at the crossroads of two markets, the public equity market and the private real estate market. And usually those two markets sort of move down the same path, but once in a while they diverge. And it's when values in the public equity market differ from the private real estate market that REITs can take advantage of an arbitrage. There are 2 points in time when REITs can really capitalize on the arbitrage. One is when REITs trade at large premiums to net asset value. You know, when you sell equity, you're essentially selling an interest in your existing portfolio. And so when you trade at a large premium, you can sell an interest in your existing portfolio for, say, 120 cents on the dollar, and you can take the proceeds and buy assets that look just like what you just sold for 100 cents on the dollar. You lock in the arbitrage. So that's one side of it. The other side occurs when REITs trade at discounts to net asset value. And that creates an opportunity to execute the arbitrage through share repurchases. So when you trade at a large discount to net asset value, you can sell assets in the private market for 100 cents on the dollar, take the proceeds and buy back the rest of your portfolio at, say, 80 cents on the dollar and capture an arbitrage.
So obviously it sounds like share repurchases play an important role in this arbitrage that you're describing. But share repurchases, they sort of have a mixed reputation in corporate America. Why do they make more sense for REITs than public companies maybe in some other industry?
Yeah, there are a lot of studies that show that share repurchases have a mixed reputation or a mixed result in corporate America. And the reason for that is that many companies use share repurchases as an earnings management tool. They're not buying their stock back because it's cheap. They're buying it back because, number one, they have the cash to do it, and number two, it helps their earnings per share. The problem with that strategy is most companies only buy back stock when they're doing well. They have the cash to buy back stock, and typically their stock is trading at a premium at that point in time. For REITs, we have this concept of net asset value. That's a terrific barometer for telling you where your stock is trading relative to the intrinsic value of your company. And so REIT management teams have the opportunity to look at NAV, look at where their share price is trading, and to buy stock back only when it's cheap, not for the purpose of managing their earnings.
Now, you make it sound pretty easy, like it's a no-brainer. Are there any hurdles that REITs have to handle in this area?
Yeah, the biggest hurdle has to do with timing. If a company wanted to buy back stock, they could go in the stock market this afternoon and buy back shares. But if the proceeds that they're going to use to buy back shares are the result of an asset sale, it takes months to sell a piece of real estate. So the biggest hurdle is the timing mismatch. The months it takes to sell a piece of real estate versus the liquidity and being able to go out into the market today and buy back shares. So it's a timing mismatch. That's quite a challenge.
So with all of that as a background, what advice would you give to REIT management teams as they consider these share repurchases?
Yeah, the advice I would give to a management team is have a view on your net asset value. Use it as an important barometer when you're thinking about issuing equity or buying back shares. Know what your NAV is, know where you're trading relative to that. And with respect to share repurchases, have an authorization from your board of directors so that when the public equity market and the private real estate market head down different paths, you can execute on that. You'll have the flexibility, you'll have the nimbleness to execute a plan that's a surefire way to create some value for your shareholders.
Jim, thank you so much for your insights.
Thank you, Matt.
For more on this and other REIT news and analysis, be sure to visit REIT.com.